An example of what currency trading means. The same way I can say that commodities trading means the buying and selling of different commodities of the world, I can also say that currency trading is the act of buying and selling different currencies of the world. And one important fact about the currency market is that it is the largest financial market in the whole world, with over $5 trillion being traded every day. And if you look at that volume, $5 trillion is a whole lot of money. It means that you have the opportunity for you to profit from this market based on the big opportunity or the amount of money flowing in that system on a daily basis. It is where the currency of a nation is traded against the currency of another nation. Why do you even need to trade online? If we look at that question, why trade online? Or why e-trading? I tell you that e-trading is the business of today. As a business that is not only the business of today, it's also the business of the future. So it's as if the future has started yesterday, and that is the reason why you want to go into e-trading. E-trading is a business that, first of all, it gives you the opportunity for you to start working at home or from anywhere in the world. And when we talk about working at home, it means you can turn your bedroom to your office easily, and then you are not paying any rent. In the comfort of your bedroom, you are running your business and running transactions that run into millions. It's a business that you don't require any boss and also no employee, because you are the one running the business for yourself. In the business of e-trading, we are looking at the business that you are not selling any physical product. No physical product is needed here. No taking stock of any inventory or collection. It is even a business that doesn't require competition. You are not competing with anybody. No, if you have a shop, probably you are competing with the person that has his own shop next to you or opposite you. In the business of e-trading, you don't have such. In the business of e-trading also, with minimal investment, with very small startup capital, you can actually start. Not only that, it is a business that has an unlimited income potential. So no matter the capital you are starting from, the potential for you to profit is so big, such that it's unlimited, based on the knowledge that you have, and also the frequency of your trading and how you run your business. It's a business that gives you what we call immediate income. Immediate income means that as you go into the business right now, you make your profit immediately. It's a business that has immediate income. Not only that, with the business, you can partake in it on a part-time basis, meaning it doesn't affect the current job or business you are running now. Remember, the goal is for you to start e-trading as an additional job to what you are currently doing, and you can run it part-time or full-time or even 24 hours a day based on your preference. With the business of e-trading, you can decide to go into that business at your leisure. With the business of e-trading also, there is no unhappy customer to deal with. There is no need for you to provide any warranty. It's a business that you are not being affected by economic cycles, and it's actually a business also that gives you leverage. Leverage is when you have the capacity to trade bigger volume. So it's as if the transaction is big and you have small money, and yet you can still go with your transaction. You can still go on with your transaction with very small amount of money. It's a business that has high liquidity based on the amount of money flowing in this system on a daily basis. And not only that, it is a business that has a high probability of profiting. All right, so if you know what you are doing, the probability of profiting and the potential is very, 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 very big. I believe that with all of this point and a whole lot of more, you can see the business of e-trading and the benefit of you going into it right now. What is being traded in this business? The answer is simple. You are trading money. So you want to use money to trade and make more money. That's what you are doing. So let's look at the practical example so that you have a full grasp of what I'm trying to talk about. Let's look at the practical example of a buy trade, a buying transaction, and we're going to use currency. Let's use dollar and naira, since we are in Nigeria and you are familiar with this type of currency, the dollar to naira. So let's assume that $1 was about 380. But remember also that $1 was actually 380 around February, March of this year 2020. Around that time, if somebody told you that the value of dollar is going to go up, is going to increase in value, what are you going to do? If the price will go up, why don't I buy now when the price is somehow at this level, such that before it goes up, I can profit? So according to what you had, you bought a $100,000, which cost about 38 million. If you do the calculation very well. Why are you buying? You are buying because you know beforehand that the value of the American dollar is going to rise, it's going to increase in value relative to Naira. So after you bought, you left it, and about some months time, by August of 2020, the value of dollar has risen in value. And in August, you remember, $1 was as high because it has gotten to the value of 480 Naira. So now you bought initially at 38 million at the rate of 380. Now price is at 480, and you want to sell. Selling now, it is exchanged back to you at 48 million. So what's the profit that you have made on this transaction? 38 million all the way to 48 million, you have made a profit of 10 million naira, because you made a profit of 100 naira per unit of dollar. Multiply by 100,000, you are going to come up with 10 million naira as your profit. All right, so this is the practical example. This is what happened in Nigeria. This is the potential of what we are talking about when you are trading and you understand how to profit by buying at 380, which is a lower price, to 480, so that you can profit. And what can you do at 480 again? You can sell at 480. You sell high. Why are you selling at 480? You are selling at that high price of 480 because somebody is telling you that that price will not go higher than 480 for now, because it's going to drop. So if price will go all the way down, then you are expected to place a sell. So let's look at the sell example. So $1 was about 480 in August of that 2020, and you didn't know that the price was going to drop. So you just bought some amount of dollar that you want to use for your business later. But all of a sudden, somebody told you that, okay, this dollar that you just bought, this $100,000, what are you going to do? Because the price will go down. So if the value of dollar is going to drop, the what you can do very fast is for you to sell. So the $100,000 you had with you, you quickly sold. You sold at the price of 48 million. Remember, the unit price is 480. So after selling at 48 million, knowing beforehand that the value of dollar would drop, by September of 2020, the value of dollar has actually fallen, and it has dropped such that the value of $1 is 430 naira. So if you want to buy the $100,000 back that you now need, then it therefore means that you don't need up to 480 or 48 million. You are buying the same unit of $100,000 back with only how much? With only 43 million. So your profit on that transaction by selling at 480 and price has dropped to 430 is 5 million naira. All right, and remember, this particular example that I just showed you of how to buy, of a practical example of how much you make when you buy or sell, is actually real, which was what happened here with us even in Nigeria. But it was happening, you were reading the news. Why some of us, we are traders, we are trading the movement of prices and also looking for how to profit from them. Meaning therefore that if you buy, you profit when the price goes up, and if you are following me, you will see that if you sell, you profit when the price goes down. All right, so there is the big question. How do you know at the exact point, at the point where you're expected to either buy or sell? Because if you can answer that question, then it means that you can trade profitably. Because when you buy, you expect the price to go up. That's why you are buying before it goes up. When you sell, you are expecting the price to go all the way down, to decrease. That's why you are selling before the price starts going down. How do you know whether to buy or sell? Well, that's the reason why we are connected to this conference. I'm going to answer that question. But before I do, let me also tell you that in the business of e-trading, we have different types of traders. And what type of trader can you be? Well, we have our 4 major categories of traders based on how they trade. We call it trading style. So you can be a day trader, somebody who wants to trade in between a day. So you want to trade in like a 24 hours time window. You can also be a swing trader. A swing trader is somebody who wants to trade and hold this trading position for several days. You can also be a position trader. A position trader who wants to place his trade and allow it to make more profit up to about 2, 3, 4, 5, 6 weeks. And you can even be an investor trader. An investor trader will place his trade, allow the trade to be running even up to a year. So you can be different types of traders based on the one that you like. Let me now show us the profit potential in the business of e-trading with this example. Now, what you can see on the screen is a price chart. A price chart is what shows you how price is moving. And here, the price started going down, forming these red candles that you can see. All right. So price going all the way down, price moved from this point A all the way down to point B. If price has moved from point A all the way down to point B, it therefore means that that movement, you could have sell placing a sell at point A, you would have made a lot of profit when the price dropped all the way down to point B. That's what I'm saying. And measuring that difference on a chart when it happened, we were able to see a movement of 961 pips. And the movement of 961 pips, when we talk about the profit you make in this type of transaction, is as big as $9,610 and even more. Why? If you are trading a volume of about one standard lot, that's what we call it in e-trading, one standard volume. When you trade one standard volume, you are making a profit of $10 per change in price. So now that price has changed by 961 pips, you multiply it by 10, it gives you a profit of $9,610 profit on a monthly basis. So that's what you have for the profit potential. Another trade here, which we took this particular screenshot to show you, was a trade on 13th of September to 3rd of October in the year 2020, and it happened on crude oil. Crude oil dropped from this point A all the way down to the point B, and when we measure that difference, it was a profit of about 1,295 pips. That's the difference in price. And if you are trading a standard volume, like I explained to you before, $10 is what you make. So $10 multiplied by 1,295 pips gives you a total profit of $12,950. That's what you make on that transaction. And let's even assume that you don't have up to a standard volume, so you don't have a big capital to trade. This can be a profit of $1,295 if you are trading a volume like a mini volume, which is a smaller volume that I believe that you can afford to trade. And remember, since price has gotten to a bottom point, a low point, price will also come up again. It will go down, it will go up, meaning that price move in a zigzag pattern. All right, so from that point A, price move all the way to the point B again. And if you calculate the movement from point A to point B, price has moved by a difference of 763 pips. That's another profit of $7,610. So you can see the profit that you can make in at least even a 2 weeks period, which I believe is manageable. Now, this is the big question. Price was at this point A, it moved all the way down to that point B, right? So how do you know that it was going to start going downwards from point A? Remember, at point A, all this movement has not yet happened. So you don't know whether it's going to go down or not, because I will tell you that from point A, some things can happen. Let me take the remaining part when the price started going down and show you only the point A. From the point A here, price can start going all the way up in what we call an uptrend. When the prices are increasing repeatedly, price can also go neutral. Neutral means that it's neither going up nor down, and price can decide to drop and decrease in value by going all the way down based on what is happening in the market, and that is a downtrend where you look at selling. So in which direction do you think price will go? Is it going to go up? Is it going to go down? Is it going to go neutral? This is a very big question, and I tell you the answer is simple. What we actually do as traders is that we carry out analysis. How we know or how we forecast what is going to happen next, what the direction of price will be, let's say for tomorrow or next month or next 2 months, is that we carry out what we call analysis. And I'll share with you the 3 types of analysis we carry out. The first one is known as technical analysis, and technical analysis, as we were being taught by the London Academy of Trading, can be defined as the study of the past market action. It's how we observe what has happened previously in the market in order for us to know what the next direction will look like. So we observe, we analyze, we forecast where our price is going into the future. All right, and that way we look at some important things like price, we look at volume, we look at open interest, and we use all this information to know what is expected to happen next. Now, one important thing that I like when it has to do with technical analysis is the fact that you can actually look at what has happened in the past. When you observe them, you start seeing different type of patterns and shape. And we have something we call a chart pattern, and you can see the way price has moved in the past. And anytime you see that movement happening again, you already know what you are expected to do. So here, price started going all the way up. It got to a high point. At that high point, price didn't go in that movement again. That is, it didn't continue going upward, because at that level it's as if price has hit a ceiling, like an imaginary ceiling there. So if you throw a ball up and the ball touches the ceiling, what happens? The ball drops. So from that level, the price dropped a little bit, and when it dropped a little bit, it went up again to that same point. So the first time it has got it to the point The second time is hitting the same point, forming a what? Forming a resistance, as we call it. This is what we call double top in the business of e-trading, and that's what technical analysis taught us. So when you see a double top, technical analysis said that we should sell, and if you sell at that level, look at all the profit all the way down. All those profits now, you are the one making them, and that's a lot of money. You are still right there on the screen. At times it can happen that the price was going down before and it got to a bottom point, it got to a very low point. At that low point, price will not go lower. Why? Maybe because price has eaten an imaginary floor. Now when you throw a ball to the floor also, what happens from the floor? It bounces from the floor and start coming up again. All right, so when price gets to that imaginary level, which is a floor, eating that place the first time and the second time repeatedly, it forms another pattern known as double bottom. When you say double bottom, it is a sign that you can buy. When you buy at that level, what do you expect to happen? You expect price to go up. That's why you are buying at a low price. Buying at that level, see what happens next, all the way up. That equates to some level of profit again. All right, so this is how profit is made, buying or selling, and that's how you use the knowledge of technical analysis. At times, price is going all the way up, it gets to that ceiling the first time, you get to the ceiling the second time, you get to the ceiling the third time. What are you going to do? You will sell, because technical analysis taught us that this pattern is known as triple top. When you say a triple top pattern, it's telling you that the price wants to go all the way down. Selling at that level, watch what happens next. Boom, all the way down. That's a lot of money for you when you are trading. All right, so that is how it happens, and this is how you use the knowledge of technical analysis to know the point where to sell. Also, you can use it to know the point where to buy. Excuse me. At times the price is going all the way down and it has gotten to a bottom point, and it got to that point the first time, the second time, and even the third time repeatedly. When you see price getting to the support about 3 times repeatedly, it is a clear sign that you can buy, because it has formed a pattern known as triple bottom. It has gotten to a point known as triple bottom, and when you buy from that level, what happens next? You see price going all the way up. Boom! That is a lot of money for you. So knowledge of technical analysis is very, very good, and it's an important analysis that you need to know if you want to trade profitably. Watch these 3 women. What are they doing? They are pounding. What's the product that they want to achieve? Pounded yam, of course. But is it looking like hard work or a smart work? It's a type of hard work, and I don't like this type of hard work. I would prefer something easier. All right. And if you look at this hard work, they are pounding, they are pounding, they are pounding. But I will just bring out my own pounding machine, and you can see the pounding yam machine there, which is a yam pounder. That yam pounder will give me the same product of pounded yam, but it's going to give me that product faster and also with less effort. I boil the same yam, I pour it into it, I turn it to pound, and it's pounding. All right, and I'm going to get that result, not going to that level of stress. So with the business of e-trading, you can also bring in technology. Of course, technology helps us have a lot of device like this that can make the stress of trading to be zero. So the stress that you normally go through, you take it away by bringing in softwares. We call them trading software. So you can have a trading software like this. It's known as PIP12. All right, so you have that software showing you a red arrow pointing downwards, telling you that the price is going to fall. So from that level, if you sell, it means you profit as the price goes all the way down. All right, and you can see what happens next. That is using a software. Some of us will even have access to use more advanced softwares like the Fresh Pips trading software. When you are using Fresh Pips, it shows you this red arrow, and you can see all this red indication on the chart, all pointing to the fact that the price is expected to go all the way down. And you can sell at that level. You see that blue arrow with those blue indication also pointing to the fact that the price will go up, and you can also buy from that place and profit. All right, so this is what it looks like when you are either buying or when you are either selling, even on the platform. So that is for Fresh Pips trading software. We also have other advanced trading software like Trend Profit Maker. So probably you are asking the question, so if all these softwares are available, why do I need to know technical analysis? Let me just use the software and go on. The knowledge of technical analysis is going to also empower you more to know how to use this software. And that's what I think, that even if you are using the software, having the knowledge of technical analysis is also equally important, since that knowledge is an addition to what you already know in order for you to be profitable in this business. All right, so that is what we have on technical analysis. But technical analysis is not enough. You need to add other knowledge areas of analysis, which is fundamental analysis. Now, for fundamental analysis, we define this as how we use the effect of news. Anytime a news is released, how do we interpret this news? How do we use this news to trade and to be profitable? That is fundamental analysis. So we use the effect of political news or social news or news that are of economic origin. We even use environmental impact news in order to trade, and we use this to understand how the forces of demand and supply, how they affect what we are trading per time. But majorly we base our fundamental analysis on economic news. All right, so we study macroeconomics under fundamental analysis, and macroeconomics is very big. I can't talk too much because this is a conference. When you come in for trading, we break all of this down one after the other, and we learn also a lot of things about this. But you know, since the conference, let me just give you a brief overview of what I'm saying. I'm saying that macroeconomics is so big that it's a branch of economics on its own, and it studies how the aggregate, how the whole economic behaves. And in macroeconomics, you know, we study a lot of economic phenomena such like inflation, price level. We look at the rate of economic growth. We even look at the gross domestic product and the changes in the employment and unemployment figures of a particular country. So there are a lot of things under there. We look at the growth parameters, inflation levels. We look at employment figures. We even look at the central bank decision, you know, whether it is monetary policy or interest rate, or it is a meeting or a conference. We look at all these things to take a decision anytime we are trading, which is known as what? Fundamental analysis. After the knowledge of technical and fundamental analysis, you can also use the knowledge of sentimental analysis. So for sentiments, there is how we use the psychology of traders to also trade, using the psychology in the sense that we want to know the percentage of traders that are buying or the percentage of traders that are selling. I want to use this percentage to know the direction where we should trade. And the simple way of doing this is by using a sentimental software. So here you have a sentimental software showing you the percentage of buyers is to sellers. And now you can use that percentage to know what you're expected to do per time. So I've talked about technical analysis, I've talked about fundamental analysis, I've talked about sentimental analysis. So with those three knowledge areas, you are very good to go even in this business. And if you have followed me also so far, we discover that the greatest asset in trading is knowledge. Knowledge is very, very, very important. Why the second asset in trading that you need is software. Is software. With the aid of a software, you make more, because the input of technology makes business processes to be easier. So how do I start? How do I start? Since we have seen a lot of things about the business of e-trading and you are so excited to also go into it right now, the best way to start is for us to now stop talking and you take action and begin doing. That's the best way to start. And the way you can begin